Shiji Shari, it is Friday, last trading day of the month, August 30th, 2024. Um, it's gonna be a crazy day, I think, as most Friday is unpredictable, but we have a 3 day weekend coming up, so it could be a little bit crazier. That's all right. I'll be here, ready. First up, Lulu came out with um, let's see, let's do Lulu, enter in Lulu. Lulu came out with earning last night. At first, it crashed down to the gap fill, and now look like it's bouncing. Could be bouncing toward the 50 MA. Hard to guess. Okay, pre-market. Let's take a look at after hour yesterday. If it bounced, it surprised me because I didn't really pay attention after 4:30 ish. Yeah, see, it crashed at first down to the gap fill, and then it bounced hard. That's a hard bounce. Look at that. That's a 35. That's a 10%, 12% bounce, and now it kind of level. It came down. So it closed out the extended session last night in the 270. Wow. And now it's still 270 ish. Okay. The question is, what next? I think if you have it, trim. My rule is if something pop after hours or pre-market, you sell, you trim, you took something off. Okay, you book in the gain. Do nothing is never my recommendation. I'm taking a look at the headline here. Lululemon revenue miss, earning beats, comp up 2%, soft guidance. I need to take a look deeper now. It's up, but could it be short covering? Hey, this stock was double from the low yesterday. Literally, you get cut 50% in the last 9 months. Okay, so easy with any kind of bullish talk. Okay, it's ugly. Let's go back 3 years. Yeah, come on. Yeah, it's nothing to be excited here. Okay, can it be short covering? Could be. Is a low in? Could be. Okay, it's not a stock I care to be in. To be blunt, I just cover it because it's a very highly followed stock. Let's do this. Let's do this before I go. So yeah, 50 MA. You should trim. Okay, you should trim. Well, let's see this. Yeah, it's not. It's gonna break that for sure. So kind of pointless to put that there. Okay, pointless to put that trend line there. The question is, yeah, it's kind of pointless to do a fib as well because no doubt, if I was gonna do the fib, right, you do this. Let's see, you're gonna do a flip. You do this extension, retracement right here, 516.39. Well, look at that. Okay, so when you do a fib extension or fib retracement in Thinkorswim, it also draw. Okay, if it come down to this line right here, that means it's 100% return, right? So, which is not a surprise that you see that line of support here that it tried, right? It violated and it tried, and then it gave up, and then it came down to the next fib, and it tries, okay, it tries, and it get back, and yeah, hey, the fib works. Okay, at the end of the day, use the fib. What else can I say? Use the fib. When all else fail, use the fib. ULTA earning. ULTA, on the other hand, didn't fare as well. Okay, the gap fill was 330, 333 ish, and guess where it was after hour last night? Yeah, it would the gap fill is 332.97 to be exact, and it filled the gap. Now the earning news there is uh to be honest, I am more surprised that Lulu bounced and ULTA down harder. I am surprised for sure. You know, because if you look at the headline, sure, Lulu sales down 2%, not bad. It's not good. Okay, let's be blunt. When something is negative, doesn't matter if it's negative 0.1%. It's not good, especially for any growth company. Okay, and for a long time, Lulu and ULTA was growth. They no longer are growth. That's why they got beat up pretty badly. But there's a $2 billion purchase program here. So yeah, I like, I buy ULTA on the dip more so than Lulu. Okay, so it filled the gap. Would I do some kind of put spread play today at the open? Most likely. Where? Probably something like a 315, 310. Maybe same day expiration put. Maybe do, something like a 320, 315 expiring this afternoon. Yeah, I like to gamble. That's worth playing. Uh, yeah, I'm more inclined to play the put spread game or some kind of short term day trading with ULTA, even buy a share or two if it come down to the gap fill. Okay, I love hey, Warren Buffett $2 billion buyback. I will take that gamble. Now, yesterday or the day before, you got Dollar General and Dollar Tree. That was ugly. Okay, you talking when you have this kind of a candle, when it first of all it gapped down and it finished at the low of the day. That's just ugly. That can't get any uglier than that. Okay, it's wow. For who they serve, as far as Dollar General and Dollar Tree, this is bad. This show you how bad both society is and the consumers, the low end consumers. Because I have been to Dollar Tree, I have never been to a Dollar General. I've seen them down here in neighborhoods that I wouldn't want to go to, and I have been to Dollar Tree store because they happen to be in regular neighborhoods, not the hood. Um, Maybe they have store in the hood as well, but I'm sure in other cities and towns they are in the hood as well. But a lot of shoplifting, okay, a lot of low end junk items. It's just bad. Okay, the not much to say. It's given the environment that we're in, I would not want to invest in them. Here's the question: is the bottom in for Dollar General? Look at that. Sheesh. 3 years? No. How about 10 years? Is there a bottom somewhere? Goodness gracious. Okay, so it violates even the 10-year high. Jeez. See, look at that. If you go back, goodness gracious, 15 years. Yeah, this stock is cratering. Okay, yeah, let's go 20 years. Wow, how ugly can it get? When you had to go back 10 years, this is 10-year low. Yeah, it's there right there. See, that's 10 year is here. Okay, 10 year is here. So 9 years ago, that was a peak, and it came down that way. Now, how low can it go? Yeah, The fib, once again, the fib came in. Look at that fib at 161.8. It lined up with a consolidation range. Yeah, the high, come back to the high, consolidated, break it, right? It broke it right here, the high, come back, consolidated, come back. Yeah, I mean, it makes sense. So what if we're heading into a recession in the next 3 to 6 months, it will come down. No need to get into DG here. About $3, slightly better, slightly, but that's ugly. If you want to play the channel, there is a channel coming up, 81-ish. Okay, 81-ish is a channel low. Let's go back 3 years. Is that line up with anything? The 3-year low is just about right where it is. Okay, so yeah, gosh, this is just ugly. These two companies are just trouble. Let's go back 10 years. All right, we're here 10 years. Yeah, I think see right here, there's a zone. Okay, there's a zone. Let's draw in the zone. See the zone of support here. Violate the zone for a couple months right there. Came back, bounce hard, and now we are back in the zone. Yeah, would I buy it? Would I do some kind of put spread play in the low end of the zone? Yeah, to me, 78, 72, something like that. That might be worth playing, but why? Why would you want to play in this space? Okay, there's time to avoid, and I would say DG and Dollar Tree is bad. I just showcase them here because I've been watching them to see the health of the consumers, the low end consumers, and it's not good. If it's not good right now, it's gonna get worse. That's the bottom line. Because Stone Cold says so, for those that know wrestling.